If you're like me, you're probably paying more for just about everything. Everything you consume. You go to the store, it's a higher price today than it was last year, 5 years ago, and so on. Where's that all coming from? Is it just greedy corporations? Well, I'm going to show you a three-dimensional view of what's happening right now at this time in relation to inflation. We're talking about commodities, we're looking at the consumer products, and so many other things. So I'll give you that look right here. And then I want to talk about artificial intelligence as well and show you what's been happening right now, because these companies are all getting involved and on board, and we are seeing so much money being thrown into these AI things that sometimes they're not even really AI. And what does that mean for the consumer, or rather the speculator, and how much cash they actually have on hand? So much right here to cover. I want to get into it right away, beginning with this. US consumer prices may show the Fed has more work to do. Data will likely underscore challenge in taming inflation. We've got slowing UK price gains. EU forecasts also due this week. So right now, this week, if you tune in and hit that subscribe button, you're going to get the latest and greatest information where we can basically say what's happening with inflation. And this is going to be the biggest thing. And this is going forward. What happens with inflation? The smallest little change, both for the CPI, the consumer price index, but also for the PPI, the producer price index. What's that all about? Well, you got the raw commodities, right? You've got metal that goes into the product, the wood, the lumber that goes into your products. All of these things eventually make it to you, but those raw commodities are actually very important as well, and that's going to impact the CPI, the consumer price index. I cover all of that on a granular level right here on this channel, and I make it simple, but you got to watch each and every day so that you stay up to date. I bring it to you as fast as I possibly can as well. Prices of US goods and services probably climbed last month at a pace that remains discomforting for the consumers, as well as for the Federal Reserve policymakers seeking greater progress on their battle to beat inflation. So here we are yet again watching as inflation, you could see right here, changes in the CPI month over month. The estimate is that it has gone up. Now that would be a very bad thing for all of those talking about, I can't even believe I'm saying it, but transitory inflation. Such gains are consistent with the Fed's view that while inflation is moderating from a 4-decade high last year, further interest rate increases will be needed to ensure price pressures are extinguished. This is important. It's going to impact everybody because the potential for a second wave of inflation is in fact going to really create a big problem. The investors right now, like literally the market, if you look at the pricing, the market believes as of October of 2022, the market has begun to price in rate cuts in 2023. Can you believe that? Rate cuts when inflation hasn't even been taken care of yet. The target of 2% inflation is nowhere near achieved right now. Here we are, February 2023. And the expectation is not only that they'll stop in 2023, but that they're going to cut interest rates. So if they don't get what they want, the market not going to be too happy. And that means you've got higher interest rates for longer, and that means companies continue to do layoffs. This is important. I'm trying to bring this all together. Let's go. Here we go. High food prices, Chinese demand boost the prospects of U.S. agricultural companies. Farm income is expected to ease from last year's levels, but remains strong. So the input costs, maybe the fertilizers and other things, had elevated considerably. This has an impact on the farmers, and they were saying, we cannot plant because it just doesn't make sense. We'll actually lose money by doing so. That has an impact on the prices that you pay at the store. There is a concern here, I will add to this, that if we see more tensions between Ukraine and Russia, and of course NATO and Russia, then this could again hurt agriculture in this way, meaning you got to pay more for just about everything, meaning there are the potential for restrictions and simply having it to be impossible to attain certain grains like wheat coming out of Russia, coming out of Ukraine. So watch that carefully, okay? With the earnings season, this is talking about one company. Look at this, just check it out. With the earnings seasons underway, food and beverage company results are sending a rather negative signal for the consumer costs. Agricultural commodity prices may be tumbling, but on the shelf prices will keep going up. You see what's happening here? You've got the fertilizer, you've got the plastic in the bottles, you've got whatever the raw materials are. Those things have come down from their highs, but the prices on the shelf continue to go up. I have told you this over and over again, that you will not see the prices coming down. Even if they stop going up, we're talking about prices at the store, you don't often see them actually come down. When I go to the store, I'm paying attention to all the prices, partially because it's just something I do and I track for this channel, but I'm just interested in seeing that. And it's like, hey, wasn't that $4 before? And didn't that used to be $2 before? And now suddenly it's $6, suddenly it's $8? That's unusual. Have the inputs really doubled and tripled? I don't think so. So we know that there's a bit of everything going on here. Everybody is taking their cut, making more money than they ever did before, every step of the way. But you get screwed over. That's the way this is happening right now. Look at this. Unilever, the maker of Hellmann's mayonnaise and Ben & Jerry's ice cream, will continue raising prices because it has only passed off 3/4, apparently, of its higher costs onto the consumers, according to the CEO. The company hinted the pain may ease this year, but it may sell fewer of its products as shoppers bulk at paying more. In the face of higher input costs, food giants like Unilever and Nestle are also narrowing the product ranges as they try to simplify operations to save money. This is important. This is going on right now. They talk about the input costs, raw materials such as the oil, corn, wheat, rice, potatoes should persist. That's according to Kellogg's. Okay, they're saying that means, guess what? You pay a higher price. And if you ignore one company, you can't really ignore it all because they're all doing the same thing. Taking money, and then what happens as a result of that? Like, is this just, okay, no, I'm not going to buy Kellogg? No. Like, what's happening? Taking money from a 401k shouldn't be this painful. Americans shouldn't be punished for seeking temporary relief when times are hard. This article is talking about how many people today are actually pulling from their 401k. They're using their, the hardship and basically saying, we need that money out. Well, if they weren't desperate, if they weren't using their credit cards, maxing it out and using the payday loans and all these things, would they be taken away from their 401k knowing they're going to get taxed so hard on it? Probably not. But they're doing that. That shows you the level of desperation that's going on today because of the inflationary forces. Larry Summers that is, sees turbulence ahead with market complacent on inflation. Like I said, the market does not believe inflation will persist. And in fact, they think that we will see cuts in 2023. If they do not get those cuts, markets are going to have some new underpants to get. The investors and speculators are going to need new underpants. So maybe Fruit of the Loom stock is what we all got to buy right here. Investors brace for risk. Inflation dooms bonds to a bear market. Surprise hot CPI print may extend the rout triggered by jobs data. Rates, traders place on option bets that target 6% Fed policy peak. Are they going to get the 6%? I don't know. But the whole point is, if inflation doesn't go down, you better watch out. This is not good news for mortgages. This is not good for when you look at any sort of debt. Any sort of debt borrowing. We're talking about the continuation of what's happening. The second wave of inflation is not good because it goes against. It's not just the number it's at and how historically bad that is and how much debt is connected to it. It's the fact that they're already pricing in cuts. So things reverse and we could have a lot of that pain that we did in 2022 happen again. The world's largest vessel operator, MSC, has a size of about 39% of the existing fleet capacity in various stages of new building. That's very good news, as they say right here. It could tame inflation in the medium term, also put resistance on prices, indicating that while we aren't sure the extent of the fall coming, there is could be upside resistance. All I'm going to highlight from this is that when we see more production, more capacity, and more storage and things coming online, that's good news. That is good news. We need this to occur because vessels are still bringing stuff all around the world. We're not making things locally. So of course, this is good news for inflation. Now you're looking at this weird chart right here. I'll show you that. And then I'll go to this one just to makes a lot more sense. Shanghai Containerized Freight Index. This has come down significantly, okay, back to those levels, like the craziness. Remember how crazy everything was getting with freight back in 2020? This has all come down. That's all I wanted to show you. The reason I showed you this one is this is like the official index. The other one is kind of just all stuck together. All you need to know from this is we can go through the years. Prices had come up towards the end of 2020. They started rising again 2021. Everything came down through 2022. And 2023, that trend continues. That's really all I wanted to highlight there. Good stuff in terms of inflation. And those companies made an absolute fortune during that period. Really were ripping people off from what the data that I saw. Maybe that's not the case, but that's the data I saw and showed you here on the channel. And then last thing, because with all of these things about artificial intelligence and so on, I wanted to highlight two things, okay? The AI boom that could help make Google and Microsoft even more powerful. Relying on tech giants for both answers and assistance rather than just information could entrench them into our lives more deeply than ever. And this is absolutely true. They are not going anywhere. What I wanted to highlight from this was, as an investor, the thing that you need to be concerned about is not the fact that these companies are going to be able to create new products and do new things and have more revenue. That's going on. What you need to worry about is regulation on these different companies because they basically have none right now. And if suddenly they become more regulated, that has an impact on their share price, as well as you're seeing a lot of layoffs and all these things. That's what you need to watch. So that's my takeaway for this one right here. This is the second part. A Chinese state-owned publication warned against the hype around AI-linked stocks in a high-profile editorial. The editorial cautioned that, quote, some market capitals are keen on false concept speculation, luring investors to chase the market and finally end up losing. Investors must not follow the trend. That's basically like the government saying that. Do not buy into this nonsense. This is also something that we should be looking at because why? When I talked about this before, there were two major themes of what would make the Chinese stock market and potentially the whole world go up as a result of the lockdowns and everything. Those two things, lockdowns, and then the second thing was the regulation on the tech sector. Those things look like they are easing up, reducing, they're going the opposite direction. That is very good for the stock market, and you could see what happened as of into last year, into this year. That's something. You got to watch that. You got to pay attention to that. So these things, but with a change, if suddenly China comes out and says, we are going to regulate artificial intelligence at these tech companies, you're going to see those stocks coming down. Do you see what I'm saying here? So I take the news articles and I'm going to try my best. I'm going to try harder to give you the takeaway from the article and not just assume that you understood what I meant by that. So these are the two things. I hope you realize that it's, hey, this is very bullish for these stocks. And this means growth. This means potentially they could hire more people. But at the same time, one little change from the government could take out these companies and all their growth that they experience very rapidly. So watch that carefully. I hope that you appreciated this information right here. I just want to say thank you for being here today. If there are suggestions that you have for me, put them down below. I read each and every one of the comments. I share things with you. I try to bring my absolute very best to this. If you want, you can join me every single day on this channel where I bring you the latest and greatest information that is simply not understood by most out there. So I really thank you for being here, and I'll see you tomorrow. Take care.